Happy Friday, everybody. You've got Colby, the DGI Crab here, coming to you with my favorite video to record of the week. It's just after 3 o'clock U.S. Central on Friday afternoon. The stock markets have closed for the week, and we're going to take a look at the four tiers, the 60 stocks that this channel focuses on to see where we can find value, make a plan over the weekend for what we're going to do on Monday and the following investment week. You got to have a plan going into the week. It's best to know what direction you're going to move before just firing off from the hip in whatever direction you think at any given time. So before we jump in, as always, I'm not a financial advisor, so you should always do your own due diligence. Don't take this as advice. This is simply my strategy. This is what I am doing in order to build my passive income by acquiring the highest quality dividend growth stocks that I can find out there on the market. So here we go, everybody. August 23rd, 2024. We're going to start here as we always do with the first tier, tier number 1. Now, this is an age-based investing channel. If this is your first time here, our tier 1 investors are aged 18 to 30, and these are quality stocks that an investor in that age range can zero in on because they can expect cumulatively out of these an annual year-to-year dividend growth rate comfortably above 10%, but hopefully more in the 12% and above rate. That's what these have been doing. So we still have Nike sitting at the top. It's great to see Nike having a rally. It felt like it was an eternity there for a bit. Nike sitting down there in the mid to low $70, but it's been recovering this week all the way back up to $84. And even at $84 with this really solid 15% recovery from the lows it was experiencing a few weeks ago, still quite an undervalued stock based on my metrics. How do I evaluate that? If this is your first time here, you might be asking that. We're looking at the valuation tab. Anything in the green is at least 30% undervalued. In the yellow, it's 20 to 29.9% undervalued. And in the red is everything else. So what I'm doing here is I'm buying things in the green, maybe here and there something that's in the yellow. And anything in the red, am I selling it? No, I am not selling it. I'm just simply holding those shares, letting the dividend reinvestment do the heavy lifting for me. And the valuation metric is based on the current day yield compared to the 4-year average yield. The 4-year average yield I update every Friday. So even if it's just a basis point or so of an adjustment to make sure I've got the most accurate numbers that I can go off of and that I can share with you. Nike 4-year average yield did tick up one more basis point. It's up to 106, but still yielding 1.76. We've got a 66% undervaluation. Nike typically does not yield this high, so even though it's had this nice recovery, still looks like a nice buy. I anticipate myself adding Nike shares for the foreseeable future. I think this one's going to have to get to at least $100 a share before I start to back off a little bit. And why is that? Well, I know that Nike themselves were doing share buybacks last year when their stock was well above $100 a share. I get the sense that they're probably going to be doing some more of that this year. So now the other one here we have is Nordson. If you were watching the channel over the weekend, last weekend, you'll know that Nordson increased their dividend by 14%, and the stock price has actually just trailed right along with that. So still a nice buy here at $257. Now, when the channel launched a few weeks ago, Nordson, the buy range for Nordson was kind of low 230s, high 220s was where we were trying to buy that at. But now that the dividend is shot up by 14%, it's increased the current yield, even though the share price has continued to climb by about that much. I think Nordson's going to keep going up just a little bit more. Still looks like a nice deal, just getting in that buy rating. Now that that dividend is increased, the price is higher, but you know what? It's a great stock, so don't let the current price dissuade you. We are looking at yield today versus 4-year average. Everything else here just looks like we're going to be sitting and waiting on. I'd love to see Visa drop back down again into the low 260s so we can start taking up some more shots at that. But Nike and Nordson is going to be our focus here in the 18 to 30. For the tier 2 investors age 31 to 41, this is the tier I'm in. And you know what? When I launched this channel back in mid-June, this tier had 5 stocks in the green zone, and now we're down to just one. Hershey Company. How sweet it is to get a great stock like Hershey. 41% undervalued. Hershey is having a hard time recovering right now. The cocoa prices, the cocoa market, they're just really high. Have been for a while, apparently, and Hershey's just bearing the brunt of that right now. Now, Hershey has increased their dividend for 14 consecutive years, but I did want to just pull up a little bit more context on Hershey in case you're nervous, in case you're buying that and wondering why are they not recovering? Should I be buying this stock? Well, we're going to look at this dividend history. We know there's a 14-year growth rate, so we can expect to see as we go down here consistent increases. But what happened about 14 years ago? Did they cut their dividend? What in the world happened? Well, no, they actually didn't. 2008, some of you might recall, we had a financial crisis. A lot of stocks suffered as a result of it. And what did Hershey do? Well, they just kept their dividend exactly the same from 2008 to 2009. They had a nice increase streak going, but hey, you know what? Financial crisis, they didn't cut the dividend. Would have been nice if they could have maybe raised it just a smidge so they could keep their streak going, but ultimately they played it conservatively. They had a very nice dividend increase streak history. They had a stock split here, so we got to look at the adjusted amount, but you'll just see increases, going all the way back through to the 90s. Seinfeld on the air here. Remember Hershey increasing their dividend all throughout that time, all the way up through to the financial crisis. Quick pause, and then back to increasing it again. And they've got a 14-year track record of that right now. Hershey is a fantastic company, fantastic stock, everybody. Largest chocolate confectioner in the country. 5-year growth rate of 12.5% on that dividend, and you get it at a nice, juicy, sweet yield, 2.8% still. So I'm totally okay right now, just zeroing in and focusing on Hershey. I remember last week buying Target. Target crushed earnings this past week, so their stock price has gone up. They are out of the green zone and into the yellow. And at certain points in time, we were buying AWR, we were buying McCormick and Starbucks. Next Era was in that green zone at one point during the channel. McDonald's I'll buy if it's 20% undervalued and in that yellow zone. So at one point I was buying McDonald's in the low 250s just over the last few weeks. Just all this stuff has just recovered and not a lot of options, but I like the one that I got. Tier 3, 42 to 53-year-old investors. Still the same two that we've had for a few weeks now, Hormel and Archer Daniels Midland. Love both of these companies. Not going to go into a long diatribe about either one. Just think that we've got really nice companies here yielding in the mid 3s when they're usually yielding in the mid 2s. So let's go get those. Medtronic we've been buying for quite a while, and it has now shot all the way up into the high 80s. So that is now a hold for us. And that's about all that there is to say here for Tier 3 right now. Tier 4, sorry guys, 54 and up investors, I'd love to see you get a value here on the single stocks. You've only got 10 of them, these high yielders here, where we're trying to get an average starting yield, around 6%, if not better. So some of these you're going to get even better than that, but just not a lot here to do. Altria Group has been on an absolute tear for the last few months. They just announced a dividend increase of 4%, keeping their streak alive, which is excellent. even with that dividend increase, they're still overpriced. So we're just going to be patient here, 54 and up, folks. Just going to be patient. Do a quick swing by my top 10 favorite stocks. So these are stocks that are contained in tiers 1 through 3. I don't think there's not a tier 4 one on here, but these are just my 10 favorite stocks. So if any of these are 20% undervalued, I jump right in. I don't even wait for them to get to 30% undervalued because they seldom even get that on sale. These are just 10 of the best dividend stocks that you're going to find out there. And these are going to be on a lot of other people's top 10 lists as well. So take a quick look here. I love all of these. I wouldn't fault you if you were adding Visa, Pepsi, or Johnson & Johnson right now. I mean, 10, 11, 14% undervalued. Not bad, but if I'm going to buy a single stock, I do need to get at least a little bit of a deal on it, and these are just a little bit too much. So the stock market, y'all, it is at near all-time highs again. So we just don't have a lot of single stocks in the green zone. So what does that mean for us? Well, it just means that if you're doing a strategy similar to my own, at minimum, you're putting 50% of your investment dollars every week or 2 weeks or month or however frequently you invest into ETFs. So I break down ETFs like this. Tier 1 would be a 25% allocation to the S&P 500, 15% to a small cap, 5% to a dividend growth, and 5% to an international. These are my favorites of those categories. You can swap out your own. Maybe you like DGRO better than VIG or SCHD. Maybe you like the Russell 2000 IWM better than VBR. These are more just categories and some suggestions here. My other 50% of my money, my other half, I do 30% Nike, 20% Nordson in this category and feel pretty happy. Tier 2, 25 dividend appreciation, 15 S&P 500, 5% small cap, 5% international, and then I do 40% into Hershey, lean hard into that, and I'm going to do 10% into Nike, not in tier 2, but if anything in any of the tiers hits that 50% undervalued mark or better, then all bets are off. At any tier, if they want, can jump in and grab some of that stock if it makes sense. Tier 3, I do a dividend-focused ETF, so VYM, SCHD, DHS are my favorites in that category. You could do 15% each into all three or 45% into your favorite one. Doesn't matter to me. They're all great choices. Staying consistent, 5% international no matter what tier we're in, and I like a high dividend yielding VYMI for that category. This week, pretty similar to last week, except instead of ADM being 25 and Hormel being 20, they've flip-flopped. I'd do a little more into Hormel than ADM this time, 25, 20 respectively. And if you're okay at this point to add something a little lower yielding and higher growth, I'd even dip a 5% investment down into Nike from 42 to 53. And the tier 4 folks, y'all, they've got 8 ETFs to spread their investments across. Some higher yielding stock options like DHS and SPYD, high yield bonds, preferred shares, MLPs, covered call ETFs, Devo and JEPI being my favorite with their longer track records and consistency. And then if you don't have anything in your tier, I just recommend go ahead and just double down on your ETFs. Instead of 10, 5, 5, 5, 5, 5, we're just going to do 20, 20, 10, 10, 10, 10, 10. I wouldn't do 10% into the non-US. So, you got an extra 5% left over. Man, throw it wherever you want. If you want to throw it into Altria because they just increased their dividend, why not? If you want to put it in Hormel because that's the most undervalued stock in the next tier down, not a bad option. 3.5% yield, not terrible. But anyway, y'all, stock market at all-time highs. We're going to run into a market correction at some point where we have a lot more stuff in the green categories. And when that happens, dividend growth stock investors are going to rejoice. They're going to work more hours so they can get more money into the markets and take advantage of great companies on sale. And if you don't have anything that looks super appealing to you, you can always just go with ETFs and not time the market. So my name is Colby. the DGI Crab. Please email me any questions you might have for me at dgicrab@yahoo.com. Links in the description below to explanations on the 4 tiers. Keep investing, everybody. I will see you next time. Have a great weekend.